Ever wondered why gold prices seem to be soaring high these days? That's the golden question, isn't it? It's almost as if gold has taken a rocket and is zooming towards the moon. And while we all love the idea of going to the moon, this rocket ride can leave many of us scratching our heads, wondering what's behind this astronomical ascent. Well, it's a cocktail of factors. You see, gold isn't just a shiny metal that we use to make beautiful jewelry. It's also a safe haven for investors, a kind of financial shelter from the storm. When economic uncertainty looms, investors often turn to gold. It's like their comfort blanket, offering a sense of security when things get rough. And let's face it, the past few years have been a roller coaster ride of economic ups and downs. Political tensions, trade wars, global pandemics, you name it, we've had it. All these factors have raised the levels of uncertainty and insecurity among investors. And what do they do when they're feeling uncertain and insecure? That's right, they turn to gold. But that's not the only reason. There's also the matter of supply and demand. Gold mining isn't exactly a walk in the park. It's a complex, costly, and time-consuming process. And recently, the supply of gold has been struggling to keep up with the demand. This imbalance between supply and demand has been another key driver behind the surge in gold prices. Now you might be wondering, will the prices keep soaring? Or can we expect a reduction in the future? Well, that's a million-dollar question. Or should I say, a golden question. The truth is, it's hard to predict with certainty. The conditions necessary for gold prices to decrease would involve a more stable global economy, a balance between gold supply and demand, and a decrease in investor insecurity. But to truly understand the situation, we first need to know the types of gold investments available. So buckle up, folks. We're about to embark on a golden journey. Just like the color spectrum, there's a spectrum when it comes to gold investments too. You see, when we talk about investing in gold, it's not a one-size-fits-all kind of deal. There are multiple avenues to explore, each with its unique set of advantages and pitfalls. First, let's talk about physical gold, the kind you can hold in your hand. This includes gold coins, bars, or even jewelry. The beauty of physical gold is its tangibility. You own a real valuable object. It's not subject to cyber attacks or digital glitches. But on the flip side, it comes with storage and insurance costs. You also need a secure place to store it, and there's always a risk of theft. Then we have gold exchange-traded funds, or gold ETFs for short. These are a type of investment fund traded on stock exchanges. They're designed to track the price of gold. Gold ETFs offer a simpler way to invest in gold without dealing with physical gold's logistics. However, they're subject to market fluctuations, and their success heavily depends on the fund manager's expertise. Next up, gold mining stocks. These are shares in companies that mine gold. The performance of these stocks is not only tied to the price of gold, but also to the mining company's operational efficiency. Therefore, they can be a risky proposition. But with risk comes the potential for high reward. Lastly, we have gold mutual funds. These funds invest in a variety of gold-related investments, such as mining companies and ETFs, providing a diversified exposure to gold. They're managed by professionals and offer a less risky way to invest in gold. However, they come with management fees and might not always perform in line with the gold prices. Now you might be thinking, which one is the best? Well, that depends on your investment objectives, risk tolerance, and financial situation. If you prefer physical assets and don't mind the extra responsibility, physical gold might be your thing. If you're more comfortable with paper assets and want a hands-off approach, gold ETFs or mutual funds could be a better fit. And if you're a risk taker looking for potentially higher returns, gold mining stocks might be worth considering. Remember, diversification is key in any investment strategy. So a mix of these options could also be a good approach. And of course, always do your homework before investing or seek advice from a financial advisor. Now that we've explored the different types of gold investments, let's delve deeper into why gold prices are shooting up. It's time to dig into the factors driving the steep increase in gold prices. A golden rise indeed, but what's fueling it? Let's start with economic uncertainty. In times of turmoil, investors often turn to gold as a safe haven. This precious metal has stood the test of time and economic downturns. proving its resilience. When economies wobble and stock markets tumble, gold often shines brighter. Now let's talk about inflation. As the cost of goods and services increase, the value of money falls. This means your dollar today might not be able to buy the same amount of goods tomorrow. But gold? It's often seen as a hedge against inflation. As the value of paper money declines, gold tends to hold its value or even appreciate, making it an attractive investment option. Next up, demand and supply. Gold is not just a shiny trinket or an investment asset. It's a key component in various industries like electronics and dentistry, among others. As these sectors grow, so does the demand for gold. And as we all know from our basic economics class, when demand outstrips supply, prices tend to rise. But it's not just industrial demand driving up gold prices. Central banks around the globe have been ramping up their gold reserves, adding to the upward pressure on prices. And let's not forget the individual investors who are also stashing away gold, whether in the form of coins, bars, or jewelry. On top of all these, geopolitical tensions often cause a surge in gold prices. Why? Because in times of conflict and political instability, investors seek refuge in assets that are not tied to any particular country or government, and gold fits that bill perfectly. So we have economic uncertainty, inflation, increased demand from various sectors, central banks hoarding, individual investors buying, and geopolitical tensions, all contributing to the golden rise. But will this golden rise continue forever? Let's find out. Gold prices may be high now, but could we see a dip in the future? The million-dollar question. Let's delve into the factors that can cause those glittering prices to wane. Gold, like any asset, is subject to the laws of supply and demand. When demand outstrips supply, prices rise. When supply outpaces demand, prices fall. It's as simple as that. But what influences these elements of supply and demand in the world of gold? First off, let's talk about economic stability. Gold is often seen as a safe haven in times of economic uncertainty. When the economy is doing well and other investments seem secure, investors may turn away from gold, reducing demand and potentially causing prices to drop. Next, consider the role of inflation. Gold has traditionally been used as a hedge against inflation. When inflation is low, gold's appeal as an inflation shield diminishes, which can lead to a decrease in demand and a subsequent drop in prices. International relations can also play a part. Gold prices can be influenced by geopolitical events and changes in government policies. A peaceful global climate and stable government policies can reduce the demand for gold as a protective asset, leading to a potential decrease in its price. Lastly, let's not forget about technological advancements. Improved mining techniques can increase the supply of gold, while innovations in other sectors might reduce the demand for gold in industrial applications. However, it's important to remember that these factors don't operate in isolation. They're all part of a complex web that determines the price of gold. It's also worth noting that predicting these conditions is no easy task. The future is, after all, uncertain. Understanding these conditions can help us predict if now is the right time to invest in gold or not. But remember, investing is not about certainty, it's about informed decision-making. So keep learning, keep observing, and most importantly, keep shining. With gold prices high, is it the right time to invest in gold? Let's delve into this golden conundrum. Gold, as we know, is a precious commodity, a tangible asset that has withstood the test of time. Its value is not tied to the performance of any specific corporation or government, making it a safe haven in times of economic uncertainty. Currently, we're witnessing a surge in gold prices, which is not unusual during periods of economic volatility. The higher the uncertainty, the more investors flock to gold, pushing its prices up. So, does this make it a good time to invest in gold? The answer isn't as straightforward as one might think. While high prices might deter some, for others it's an indication of gold's resilience and a testament to its potential for future gains. But remember, timing the market is a tricky business. When it comes to investing, it's not just about when to buy, but also when to sell. Now let's look at the future. Predicting gold prices can be as elusive as finding a pot of gold at the end of a rainbow. A myriad of factors, from geopolitical tensions to inflation rates, influence gold prices. But if history is any indication, gold has consistently shown its ability to retain value over the long term. So, should you invest in gold now? It depends. If you're looking for a short-term gain, the current high prices might not work in your favor. But if you're considering a long-term investment, gold's historical performance and its role as a hedge against inflation might make it a golden opportunity. However, it's important to note that investing in gold should be part of a diversified portfolio. Like any investment, it carries its own set of risks. Therefore, it's crucial to do your homework, understand your financial goals, and consult with a financial advisor before making any investment decisions. But what about gold in its most coveted form? Jewelry? Oh, gold jewelry, a timeless allure. But should you buy it now? That's the question on everyone's mind, isn't it? Let's break it down. Gold jewelry is not just about the gold. It's an artistic creation, a product of craftsmanship. And like any form of art, it comes with its price, the making charges. These charges can range anywhere from 6% to as high as 25% of the total cost of the jewelry. Now that's a considerable amount, isn't it? But here's the catch. When it comes to reselling your gold jewelry, these making charges are not taken into account. The resale value is based solely on the weight and purity of the gold. So, if you're buying jewelry as an investment, it's essential to factor in this loss. What about the current gold prices? They're soaring, aren't they? Yes, indeed. But remember, gold prices are like a roller coaster. They go up, they come down. It's all part of the thrill. What's important is the trend, and currently, the trend is upward. Does that mean it's a good time to buy gold jewelry? Well, that depends. If you're buying for personal use and you're not too worried about the resale value, then yes, it's always a good time. Gold jewelry is beautiful, it's classic, and it never goes out of style. But if you're buying purely as an investment, then you might want to think twice. The high making charges and the uncertainty of gold prices make it a bit of a gamble. You might be better off investing in gold coins or gold ETFs, which don't come with making charges and give you a more direct exposure to gold prices. Gold, as we've seen, is more than just a shiny metal. It's a complex and fascinating investment option. And like any investment, it requires careful thought and consideration. So whether you're charmed by the allure of gold jewelry or intrigued by the glimmer of gold coins, always remember to weigh your options and make an informed decision. Let's recap what we've learned about gold as an investment. Gold, as we've discovered, isn't just a shiny metal we adore in our jewelry. It's a multifaceted asset that opens up a spectrum of investment opportunities. These range from physical gold, like bars and coins, to paper gold, like gold exchange-traded funds, and digital gold, which is a new player in the field. Each form of investment comes with its own set of considerations, offering flexibility to cater to different investment goals and risk appetites. The soaring prices of gold that we observe today are influenced by a cocktail of factors. Uncertainty in global markets, inflationary pressures, and reduced interest rates all contribute to this upward trend. Gold, being a safe haven asset, thrives in these conditions, standing as a beacon of stability amidst economic turbulence. But what about future prices? Can we expect them to decrease? The answer lies in a complex interplay of global economic conditions. A stable economy, rising interest rates, and a strong stock market could potentially put a damper on gold prices. However, these are not ironclad guarantees, emphasizing the importance of staying informed and keeping a watchful eye on the market. Is it a good time to invest in gold? That's a question only you can answer, based on your financial situation, investment goals, and risk tolerance. Gold can serve as a valuable addition to your portfolio, providing diversification and a hedge against inflation. But remember, it's not a one-size-fits-all solution. And finally, the allure of gold jewelry. While it's a joy to own and wear, it may not always make the best investment due to factors like making charges and purity concerns. However, it certainly holds an emotional value that can't be measured in monetary terms. The world of gold investments is as diverse and dynamic as the metal itself. Keep these points in mind and you'll be well equipped to navigate it.